We're just going to be going and having a chat with the management. We're going to come back to you. Healthcare Global, that's the stock in focus. Well, we got highlights from a meet they had with ICICI Securities. The company is looking at ramping up their margins from year on and also improving their ROCE. To discuss the outlook, we're joined by Mr. B.S. Ajaikumar, the chairman and CEO at the company. Hi, sir. Morning. Thanks so much for joining in. Well, let's focus on both those 2 points itself. Margins, I believe, you have a couple of reasons that you're going to be focusing on, a couple of factors which will help improve your margins. So what is the targeted margins you're looking at? And I believe you want to take your ROCE as well up to around 18 to 20%. Give us a time frame for that.
Yeah, thanks for having me. And as far as the margins are concerned, we have been focusing on the margins quite a few times. Obviously, the COVID interrupted it. But post-COVID period, we have recovered very well. Our margin now in the range of about 18 to 19%. Mature centers are actually in the mid-20s. And we expect even the centers which are new to ramp up to that level. So we are looking at margins in the region of low 20s as we move forward to the 23-24. Our goal is in the low 20s. And one of the reasons we are achieving this is brought in a lot of operational efficiency in the system. Apart from the centers which are ramping up to mature centers, obviously once they ramp up to mature centers, we expect the margins to improve. This has been one of our focus in the last 12 months as we enter the period of consolidation. As far as the ROC is concerned, once again in our centers which are mature, we are seeing ROC in the region of about 20-22%. Our center of excellence has a 25% ROC. Obviously, the new centers are ramping up, particularly centers like Mumbai, Calcutta. Once they ramp up, we expect the ROC to reach the level of mid-teens and going forward to around 20%. This is what our expectation is as we move forward to the new year.
So low 20s margins by FY24, FY25. That's the guidance, sir, that you're sharing with us. Can you tell us what are the kind of margins that you make on your international patients, medical tourism, because that's picking up as well. What is it currently contributing? The last time we spoke, you said it was about 5%. Has that gone up even further? And the kind of margins, sir, that you make on this?
The international contribution is, as you know, it is fragmented, only big cities.
Yes.
Our bank center is close to 18% is our revenue is from international, and it is ramping up very well. Mumbai, Calcutta are also participating apart from Ahmedabad. And overall margin is still around 5 to 6%. I don't expect that to increase significantly in the coming year. But the margins in that area, in the international, is not a whole lot different from what we see in the margin domestic. It's about 10 to 12% higher than the domestic.
All right, margins 10 to 12% high. That's a sizable number, sir. I mean, if that ramps up, then it could help the overall margins as well. Yes. And you're saying you're expecting the contribution to stick around 5 to 6%.
Yes.
Okay, all right. You're also on the prowl, I believe. You're looking at standalone oncology units, and you're looking at trying to, do some inorganic growth. Give us a couple of details. First up, what is the size? What is the size you're looking at? And second, what is the timeline? Do you think you'll close it out in this year, that's FY23? Or are discussions that are currently underway suggesting that actually will get pushed forth to FY24?
Yeah, as far as we are concerned, one thing I want to take a step back and say, cash flow is very important. We are very cash flow positive. We are generating somewhere around 15 to 20 crores positive cash flow every month. Obviously, and available debt we have puts us in a strong position to do some of the growth strategies for us. The growth is going to happen two ways. One is, of course, M&A. We are looking in discussions. We have already announced we are in discussion for our discussion with our Milan and Rome, where it is in the final stages of closure. Apart from that, we have selected certain areas for merger acquisition in different states. Once, of course, that comes to fruitful, we'll, of course, announce it. And the third area we're looking at growth is really investment in technology itself and existing centers. We see a significant growth happening in the technology itself, like robotic technology, AI-related, genomics, circulating tumor cells. Investing in the present centers itself will give us a significant growth as we move forward, because there is a demand for high-end technology, high-end service, particularly in big cities. And this is where we see the third vertical of growth.
Mr. Ajaikumar, we'll leave it to that. Thank you very much for joining in, and season's greetings to you and everyone at Healthcare Global.
Thank you.
Thank you. We'll slip into a very short break. On the other side, we'll be joined by Mitesh Thakkar and Shrikant Chauhan, and we'll get in some technical trades to power your Friday morning.